So here's another trade example I took, but for the longs. It's the same thing. We got the low, the high, a low, and then a break at that high, which gives us our level that we're going to use to enter. Right? If we zoom in, same exact thing. The reason why this move was so aggressive is we got that liquidity grab at the bottom of the zone. So we got that little fake break of the zone, which was the liquidity grab that we needed, which also put in that low for us. And then we got the push up that showed us the highs, that gave us the highs where the breaker is formed at. So here's our breaker. These candles, this set of candles. And then we had that last push down, which also gives us that double bottom setup that we're looking. Whenever trend is bearish and we're coming into that demand, we want to see some sign that the trend is going back to bullish. So I like to see that double bottom in demand, whatever the case may be. This is the best setup, in my favorite setup. But a couple added bonuses is that grab, that fake out at the bottom of the demand zone, and then us seeing that double bottom, right? So it gave us our breaker here. We also got this little zone here. We can draw that up, right? That's what I originally was entering off of. But the breaker is actually this zone, because that's where our high was at, right? But we did get this resting candle before that impulse moved down. So that's what really showed me that this level I wanted to pay attention to, because we had strong selling originated from this level. And then we had the high forming at that level. So that's what gave me that key level, right? So after we got that grab at the bottom of the zone, we got that low, we broke above the breaker. We were just looking for the retest of that area. So that wick, it came in very quick, right? Again, displacement through that level as well. Not just a weak little push up, not just a small little candle. We got that displacement through that level. This strong break, nice break of this candle. The full body candle, not the wick. And then quickly, we had to be extremely quick. We set our entry, our limit order at the level, down here at the breaker, and then we got in, right? So if I would have had it perfectly at the breaker right here, I don't know if I would have even got into that, been able to get into that trade. But because I was going based off of this area, this candle here, I got tagged in, right? So then I got tagged in, and it started moving up. But this is pretty much the criteria to get me in. Is this double bottom, add a bonus if we get a grab at the bottom of the zone, wicking the bottom of the zone, seeing that double bottom pattern, seeing those highs get taken out, and then seeing a pull back into those highs quickly so that we can get in. And just to add on to another long example, this is a trade I took. I had the same understanding, but this is before I had these rules in place for the entry. So as you guys can see back here, my entry was back here on this candle, and I risked getting stopped out because my stop loss was down here and price was still pushing down. I didn't wait for this confirmation entry that I'm developing now, this set of rules that I'm developing now for the entry. So pretty much the same exact thing. We got the low, we got the high, we got a low. Again, look, this is the demand zone here. What happened? We wicked the bottom of the demand zone again. So that's perfect. We got the liquidity grab. Here's the highs. Break of the highs. We also got that strong candle, right? So a strong move up, displacing through those highs. Right after that, what do we get? Once we got that, that's our level. So our level is here. Right, here's our breaker. That's where we're looking to enter. Right, so pull back into that area. We also had strong displacement with this candle, so that showed us that that's an important level, because right after that we had a strong displacement back up. So that's exactly what I'm looking for. That's also showing me, all right, that level right there is important. So I take that. So that's pretty much where the breaker was at these highs, and then just waited for that pullback right back into that area. So that's where the limit was at. Boom, right here. And that's where the entry was at. So I was in way before that. I wasn't patient enough. I didn't wait. back here and not risk getting stopped out. So if I would have just waited for the entry, I could have prevented that from being. I mean, all of the pain that was coming with that, I could have prevented. So pretty much, again, the same setup. Boom, highs there, wait for their entry there. It's simple. You just gotta have the patience and the discipline to let it play out, and then take it when it's there. So without that criteria, do not take it at all. But again, like I said, for the rest of the year, all year next year too, that's all I'm looking for. This same exact thing over and over again. Of course, it's at higher time frame key levels. Yes, that was demand. Yes, that's high time frame support and resistance. And then just waiting for that setup to format it. All right, so here's another short example from a trade I took. We left a lot on the table, but it was higher time frame demand down here. I wasn't risking us that being support, right? But pretty much same thing. This is on a 1 hour, so this setup happens over and over again. Again, the key here was that this was a higher time frame key level, so this was a 1 hour demand zone that got broken. We was pretty much coming back in here into it to retest it. We peaked back above it. That was a liquidity grab. Same exact setup we were looking for just happened on a 1 hour this time. So I'm going to zoom in. It's getting repetitive at this point, but I want to document that it should be repetitive. I need these entry signals to repeat over and over again. What do we have? We had a 1 hour supply zone here, so that was the key level that we were working around. What happened? We got a high, we got a low, we got to break it at high. Right? So where would our where is our breaker at? Where is our order block? Boom, here. That's all it was at. This is the low that was created to make that high. This is where we pull back into. Boom. What happened? Peaked above this supply zone, took liquidity above this supply zone, turned around. What do we get? Displacement. Displacement through the breaker, displacement through that level. What do we get? A push, a break of it, a retest into that level. Back down. So the same thing we're looking for. Boom, high, low, high, break it at high. Break it at low, high, break it at low, retest it at low, get in. Same exact thing. That's all I'm looking for. All 2024 for the rest of the year, for the rest of 2025. These are the clean setups, A+ setups, right? They're happening around a key level. It's a bonus point if it happens around on a 1 hour, if you get this set up on a 1 hour, because now the 1 hour is aligning with the 5. And then when you break down to the 5, we should be seeing the same exact thing happen on the 5. So that's even better. And then I got one more example here for one that I shouldn't have done. This one, again, I didn't wait for that criteria. So in a smaller time frame, y'all can see I had the right idea, wrong entry. And this is the only reason why, this is the one thing that was keeping me from being profitable, is not having that consistent entry signal, not having a consistent setup. I'm able to identify the levels, but I didn't have the patience and I didn't have the setup to know what I was looking for every single time, but I'm able to find the levels. Here was my entry. My entry was here. I got stopped out here. Right after I got stopped out, it turned around. So I'm able to identify the entries. Look, this yellow line is my entry. Look exactly what happened. Boom, we got the entry that we should have waited for to take. Right? We got it there. So I'm able to identify the levels. High. High, low, high. Technically, that was the pullback there. High. Taking out that high. Right, where's our breaker? Our breaker is here. That's the down candle that created the up move. Broke below it, not as strong of displacement as before, but we did break below it. Entry technically could have been there. Stop above highs, these highs or these highs. Right? So we're entering at the zone. This was a key support and resistance level. So that's why we got that pullback into that area, right? But we could just, based on these rules, after that breaker's broken, enter at the front of the breaker or the top, bottom, whatever y'all want to call this, and then just set our stop above highs, right? Boom, and then hit target. But I got stopped out of this trade, but I did still document this just to show, this is the same exact thing we're seeing. Now, it would have been a lot better if we got maybe a 2-candle pullback or some more structure here, but this is pretty much the same thing. High, low, high. Once that low break, that's the level we're looking for. A retest somewhere in that area. Right? But I got stopped out of that. So same thing. This is all I'm looking for all year. This is my A+ setup for the rest of the year and next year. And then I had some other ones that weren't as clean. I might look at those as well. All right, so I want to break this down for myself here. This trade was a little wonky because it wasn't the perfect setup that I like to see, but there was this 5-minute supply here that the entry was basically based off of. I didn't take the supply by itself, but that's what the reason for taking this trade was. That was a key level. So this is the supply right here, right, that we're going based off of. Pretty much we got the setup that I'm looking for. I'll put it in yellow to show the structure. Here's the low. We got the low to high, right? And then I'm going to call this the low here because we pull back. And this is the higher high to form the breaker. So it's not a lot of candles to form this structure, but it still qualifies everything that we want it to qualify for, right? So I'm going to zoom in. Again, here's the low here. Put in the high, pull back, put in the low, and then for the liquidity grab, boom, took out that high. Took out that high. So technically, the breaker, this is technically the breaker candle. This candle right here is technically the breaker candle, right? So if it was a zone drawn up around that, that's what it would look like. But if there was more structure, more candles formed, then yes, that would be the candle. So that makes our level at that low, right? So that's why we got that perfect pullback into this level here, which could have been an entry, right? Once we got that break, and this candle is important here because that's the displacement through. That's what we want to see. We want to see the displacement through the level. We want to see the displacement through the breaker. So a strong break through the breaker, which was supported here by volume as well. And this big candle through those lows. Remember, the lows are here. Remember, this is structure. Higher high, and this is liquidity. This is the liquidity grab at those highs. So this candle right here, boom, let me get out of here. This candle is the displacement through lows. This yellow is the structure. Running these highs up here was the liquidity. And then we got the breaker was somewhere in this area for the green zone. So we take that tap. Let me undo that. Entry will be on this white line. Stop loss will be above the zone, either this zone or this zone. And then we can set our target 2-1. But this is pretty much the same exact setup I'm looking for all year. That low, creating a new high, putting in a new low, a high that's taking out the high, and then displacement through the lows to show that that's our area, that's our level of interest that we're looking to enter off of. Boom, we get a pullback into that area. Again, this could have been our entry candle here. We just been in some drawdown, which is fine. But then we got this candle here, that nice wick right back into that level, showing that that's the level we're looking for, right? So if we wanted to wait for a stronger move into this demand, then this could have been a second entry here. Another thing I wanted to talk about was the possibility of pushing into this demand. So that's another thing. Like, how? Okay, if it's demand below, where can we look for the rejection level to be? Is wherever that displacement through the lows was at, is where it could be. So even if it's a demand below, wherever the breaker level is at, wherever the displacement through the level was at, is where we would look for the reaction to reject after it bounced off that demand. So even though it was a zone down here, even though it was support down here, once price come into it, bounce back off, we'd be looking for that rejection in this area to validate it. So that's all I'm looking for all year. Same setup, pretty much same setup every time. That's all I'm gonna be looking for.